Good morning, traders. This is your daily brief with Captain Jim James. I did post a daily brief that was comprehensive this morning on Twitter. This would be a companion piece so that you can understand what I'm putting out there and also learn how to basically do your own daily brief, your own trading plan for the week and also for the month, for the year, and every day. So you could always check back to compare notes or at least set up a charting system so that you can chart for yourself. If I don't post one or I disappear one day, you at least have this information. And you can also base it off what other people say. When you are watching a YouTube channel or watching posts on Twitter, you want to be able to have a baseline for what you think to compare to other people and not just trust people on the internet. Okay? So we are looking at the rut, but furthermore, I'm looking at TradingView. I like to use TradingView for my research charting, and then I carry it over to, let's say, Webull. I also use other charting software, but this one is free. What I like about TradingView is that they carry more tickers, unlike Webull. And I like to do my research charting on the futures charts. You'll hear new traders say futures don't matter. That is incorrect. All of your research, or my belief is that my research begins in futures and then extends into the cash market. You can get a TradingView account for free. We're gonna chart out on a year the Russell RTY. We're gonna carry that over into a cash market for IWM, and I'm going to also show you the SPY, which is ES or the ES Mini, which you can also find here in TradingView, and carry those charts over into a SPY chart. My only issue with using TradingView during the cash session is that unless you pay for an account, the market data is delayed by 15 minutes. And I know that the market data on Webull is live market data that's free. So I'll do my research on these charts, and then I'll carry these numbers over to Webull, and it'll work for me, and I can adjust them as the days progress throughout the course of the week. So without further ado, we're going to look at the Russell here, and this is, I believe, this is a 1 year chart, and there's a few things I want to know when I'm setting my major support and resistance lines. And the first thing I'll check is a website called theequityclock.com Seasonality or /Seasonality. And specifically, if we're to look at they have major indexes, sectors, industries, commodities. What else I find neat about this is, we're coming into the end of the S&P 500, and it's neat how they write, May 5th, and then it begins again on October 28th and ends on May 5th. And so what that's trying to show you is this is when you start beginning to enter your positions is October 28th, and you're starting to wrap up your longs beginning on May 5th. Although you'll see summer earnings coming into July, you would have positioned yourself, believe it or not, from October through May leading into July. So when we get to Apple being at 150, you had actually entered at some point at 120. So keep that in mind. And the same goes for the Russell. So you'll notice that the Russell is going to trail off a little bit later than the S&P 500. So I'm bearish, or I should start to become bearish on the Russell in the intermediate time frame, long time frame. But at the same time, I have to also look at a chart on a smaller level, 3 month, 1 month, and a weekly chart to see if there's any bullishness in that chart. And so if you're to look at the Russell right now, it's almost right there. You can kind of see that there is this topping pattern. Its trend is probably trending down overall to begin a new cycle into next year. But we do have a defined trading range here that you can see that's being respected, although at any time it might not be respected. We're going to set a support line here at the bottom. We're going to change that to red. So we know that's bad, right? We don't ever want to go below this line. The bears know that, the bulls know that. And we've got another respected line up here at the top. We'll make that one green. So we know that that's green to go. Anything above this line is bullish, okay, on a 1-year chart. And I try to check if I'm playing the SPY or if I'm playing the IWM and I'm focusing on that one ETF, I will make sure to look at the 1 year, the 6 month, the 3 month, the 1 month, the 5 day, and the 1 day almost every day. I try to check back on it, and especially when I don't know where we are in the charts. Sometimes when you scale back to a macro level, it'll give you better perspective as to where we're going, where we're headed. So here we go. We've got those two lines set up here. And even right now on this chart, it's looking very bearish on a larger time frame. So we'll come down to a 6-month chart. And we start to see that we're getting a little bit more information here. And you're going to see a bearish resistance. So I'm going to put in, let's see if I can find it, trend line right here. And it looks like this line's been respected the entire time as we come down. You can see that here. Now, if you were a bear, you would play every one of these rips down. Every time it touches this line, you'd play this down, play this down, play this down, play this down. Now, the reason for pausing at this point in this chart, if you were a bear, would be you didn't get continuation down through this major support. You didn't even test it. Right here, there was a moment where buyers stepped in. And then they also stepped in with you playing the market every day. You know that on the 19th, somewhere in there, yeah, it did tag down here on the 19th, firmly rejected. And then you notice that, the 19th it was firmly rejected. But the key part was that right here, buyers stepped in. And I think this was the moment where longs in tech and big caps that were reporting this week, they were starting to pull back and then shift over into other sectors. If you're a bear, this would give you a pause. And they tried to dump it again on the 27th yesterday, and they failed. And they should have had a fair, if the market was going to let go yesterday, you really did want to watch IWM, because this would have helped the fall of the market. If you saw NASDAQ going down like it was, and then if you had seen IWM break here, you couldn't make the case for rotation out of tech to some other index. And so this is what I watched yesterday was IWM. And you saw this rejection here. This does not bode well for bears. This is not a good indicator at this point for bears. Now, some people will say that it looks like a reverse head and shoulders or a right shoulder pattern. That's bullish. I don't believe in those patterns, so sometimes I do, but I tend not to go down the rabbit hole on them. I try to look at where the buyers and the sellers are, where the demand lines are, and you can tell that there was demand here and there was demand here. So that's cause for concern. If I was a bear, I would scale back how much I'm shorting here at this point. And there's another reason for that. You've got some support here and some support here. And this is showing to me that the bulls are going to want to take a chance to break through this resistance here. Now, this might be on a short time frame, just for the next 2 weeks, maybe 3 weeks, while we have ER reports coming out from companies that make up a large percentage of the Russell, especially the 2000, even though there are some tech in the 1000s that are in the Russell 1000 that are very strong and make up that smaller index as well. So um, I want to take a look at this closer here, and before I put this onto my day trading chart. But if you were trading monthlies or weeklies, this is where you would be at. You know, your 3 month, you'd be checking this out every day, and then you come down to this 1 month chart here, and you can start to see how this is working out over here. And you can firm this up later if you like, but we're not going to really trade here. All right, we can always come back and tighten it up if you wanted. You can bring this down here, and over time you will. Over time you'll get it nice and tight. You'll start to look for, you could even, that little bump up right there, you could even tighten it up to protect yourself. You could put it right there, somewhere down in here, if that makes any sense. And even you could even move it down slightly right there, let's say, somewhere in there. And it's all to your taste at that point. But if you were a bear, you would have caught every one of these. Boom, 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 and stop right here. So then we're going to go to the 5 day. Let's go to the 1 month again. And let's scroll back if we can a little bit. Let's take a look right here. So we know now we have some form of major support here, right? And so you can put another line in, or another support line, horizontal line somewhere in here. We know we bounced right there. And we'll make these, that's kind of like a warning sign, like you're looking at a stoplight, right? And this is where we bounced today. And so then we're going to draw in some more. We're going to put another horizontal line in over here. It looks like we got another one right about there. Put another one. I got to figure out what these hotkeys are in TradingView. So put another one right here. And that's looking pretty good right here, right? And so we're going to get down closer. And we're in the overnight session right now. It's 3 o'clock in the morning. We're about to open. If I had to guess, we're going to come down here today and bounce off 270 or 2171. We might retest this again today. And even if we don't retest this today, I'm going to put in a minor support line right in here. And this is looking bullish to me, or at least an attempt, right? So you can change this color if you like. You could change this to a light blue if you wanted to. We might test here or here. These will be your two tests. Anything below this green line is going to be bearish. I think you're going to open above here, if I had to guess, and pop up and down. But you've got this trading range here, major resistance right here. And you've got see this little break right here? This was an indecision. Are we going up? Are we going down? Where are we going? So I'm going to put one more right there. And so I bet somewhere in here today, you're going to get some bounces on IWM, and you're going to find some major resistance in here. But you are also looking for something else. You're looking for that bullish continuation. And if you do break through somewhere in here, 2209, and you're able to actually sit on top of support up here on 2216, maybe slightly higher, 2217, this would be very bullish. This is becoming bullish, but this is bullish, and this here is very bullish. So you're looking for this over the next week or two, this continuation up. So you're at the beginning of an attempt to turn IWM bullish right now, unless market conditions were to say otherwise. And I would be looking for these trading levels on IWM as a bull and as a bear to find out if we are on our way up or if we're on our way down. And so you can take these numbers here and plug them in to Webull accounts, or you can sign up for this if you want and pay for real-time data. I know it's expensive, but on Webull you can pump these numbers in and you've got your trading range for the day. If you already use this over the buying weeklies, you would know when to buy, when to sell, depending upon what happens. You could put a stop loss in down here at 2171. This would be a major support for you. You would know since something's wrong or going bad, or we're just having a down day. And you would, if you were just bullish, you could wait until we come to this area here to go long IWM. You could wait. If you're want to take some risk and see where we're headed and think the next few days are going to be bullish, then you would enter here and if buyers showed up and ride this up. Okay, so here's where you can do some research. This is why I like to see, and you'll see these numbers hit in cash market as well. The RUT does correlate to IWM pretty closely. ES comes in very close. SPX does not. Or excuse me, the ES Mini comes in very close to SPY, correlate to some of the cash market charts quite closely. And so people tell you that it doesn't matter, or futures charts don't matter. This proves to you otherwise. You're finding some of these supports, and you're finding a more consistent picture here in futures than you are finding in the cash market charts. So, okay, we're done with this, and then we're going to head over to the chart that I've been using with you guys. You can use any charting software you want. I did a previous video where I showed you the trend of a chart, which way it's heading. So we've already put these lines in for the SPY. And, I'm not long here on SPY, and I'm not long on SPY on a short time frame, and I'm not long on SPY on a long time frame, especially on the seasonality clock. You know that at some points between now and September 1, the trend of SPY should change or turn bearish until, I would say, at least October 1st, but in and around there. You might give it a week or two on each side, but we're definitely gonna do a pullback here for this run. So for right now, though, you're looking at this chart. You can get a good feel of where we are. Are you willing to go long for a month out? Call options? Probably not. Are you going to go short here, though? Probably not. Or you could go short, but you can't buy puts, just straight puts here, because of course, usually the bulls can pin the SPY for a long period of time. You'd kill your puts here, but you could short and pull back and have tight stops all the way up until it does drop. You could get some put spreads that would probably, if you got them in the right strikes, that would still print at some point down the road. But so what this would be good for the SPY right now is for day trading or buying weeklies on dips at the 10 or the 20, even the 5 to some extent, because this right here, I think this is the 5. This is the 9 EMA. So the 9 EMA we touched, and we touched there right here as well. We didn't right here. We actually came through, but the 9's been quite respected. Okay, the 10 EMA, estimated moving average, or at least on this 1 year chart. We'll get closer down and we'll take a peek and see where you can enter weeklies. Even if you're selling them same day, if they're in the money, they should print. Unless we're coming down, which this here still looks like we broke our all-time high, and we're probably headed to some volatility for at least a couple days to get some range expansion. So we'll go to the 6 month, take a closer look, and we're doing a daily. If you're going to do yourself your daily chart and see where Apple's going, or because they make up the SPY, or if you want to see where another stock that makes up the SPY is going. You'll track the SPY, or you'll track NDX or IXIC, or the NDX would be the direct correlation to NQ. We're going to come down to the 5-day here. This is a weekly right here. We're looking at a weekly, and this is your weekly low right here. If you start to close below your weekly low, things are bad. We're not weekly low, but this would be like a running weekly low. I guess the 26th was the first day of the week, so that would be your actual weekly low, which you've already tagged. But you're going to keep this one right here, and you're going to keep another one. Oh, nope, I'm going to put another one right down in here, somewhere, right there. That works. You can firm them up. They'll probably be slightly higher. You'll probably find some resistance here. Probably find some resistance in here. You can see where we tagged yesterday, and you can move these each day. You know where we tagged yesterday. And there's another thing too that tends to happen each day is if futures, let's say futures rips higher in the overnight, and there's a big gap right here where we haven't traded, it'll tend to want to come back to that. And the same goes for the scene of the crime. If you, how do I make this smaller? Let's talk about scene of the crime. So let's say we come up here and we drop down here, but this drop is in futures still or in pre-market. You will see a tendency in cash market to come back to the scene of the crime. Now this is pretty clean. Anything that's done in the overnight session is low liquidity, so you'll see us come back to revisit those often. And you're going to be looking for the close of the day before, and you're going to put another support line right in there. Okay, and I don't see anything in overnight right now. This is low. They're not really doing too much. So you're already on your 5-day, and you're coming into your day coming up today. And your high from yesterday was somewhere in here. So this would determine if you're going to close bullish or if you're going to close bearish, right? So these two lines right here are going to tell you all about your day today, what's going on. Hold on, now we know this was the close yesterday, right? So we'll make that one red. We want to close above that line. And we also know that somewhere in here, you don't have to check, and you don't have to check the official closes. You get it close enough. And this one right here is a green go. So you put that one in. That's really what you want to see, right? You want to see when we open tomorrow, do we bounce and go, right? Do we bounce down here and go? Do we bounce down here, right? As we start to drop through these support levels, it's going to show you how bearish the day is becoming. I'm going to put another minor one right in here, but you don't need this line. If I'm trading today, I don't feel as though I need this line, but you could put something in here because this will show the open 2 days ago on Monday. But I'm not really too concerned for this. Normally, I'll wait and see what happens the first 5 minutes, let's say. Unless I get a good feeling of where it's going and I want to play some FDs. But this is really what you want to know is which way we're going today, okay? And then you want to think about your overall bullishness this week. Are we bullish today? We know we've got FOMC today. We know we'll probably have some volatility today. So am I bullish on today? Probably not. Maybe later in the daytime. I'd really like us to see us get past this one right here. I'd really like to see us get past here. I might even make that another yellow line up here, or an orange one. That works. And so now I've got 1, 2, 3, 4, 5. Anything over here, over this is bullish. If we maintain this, we're bullish again, okay? So now you've got 1, 2, 3, 4, 5. Now, as your week progresses, and wherever we close on today, on the 28th, you can adjust these bands each day, okay, on your trading chart. And over time, you're going to get a feel for are we bearish or bullish for the day? And are we getting the bounce here and moving up? Are we opening on the high? Because let's say we're opening up here in the high one day. There's a fair chance, right? We're coming back down here to the scene of the crime. On the open, if we pop straight up, there's a fair chance. Now, we will sometimes gap and go if there's enough volume. But typically, let's say 3 out of 5 trading days, or yeah, I'd say 3 out of 5 trading days, you can pretty much plot the direction of where your index that you're playing, or your stock that you're playing is going, with some other information. Now, there's some other things you want to be looking for here. You know that we have an established trend line. I think I hit the 3-month there. That might be the 1 month. But you're also looking at this right here. And this is important. Okay? So you start adding all this stuff up. So you've got all your trend lines here for this week, right? And now you start to see that today probably looks like what? We're bearish below here and we're bullish above, right? So you see this trend line. The bears want to break through this here, this minor support here or major support, and start bringing us down. So this is what you're looking at as the open today. Where do we open? Do we bounce and move higher? Do we just go sideways all day long, which is I would expect today that we're going to go sideways. We're going to dip down and try to beat through these lines here through FOMC. And if the bears are unsuccessful or we have no bad news, it's going to rocket back up. And I bet we could even possibly test all-time highs again coming into Thursday, Friday. And that's where you get that 443 that everybody's talking about. So if that happens on Thursday, we might sell the news on Friday, or we might even come through here and make one last shot to it on Friday. So this gives you your viewpoint for today in SPY. If you want to see how to play SPY today, I just laid it all out for you. This is what everybody's looking at. These lines are respected to an extent. There are demand lines here, and there is fear here as well from the bulls. So this is what you're looking for all day long. And remember, I'm buying this line right here. This line right here, right now I'm buying, and I'm buying this line. If I lose this line, I'm buying call spreads that are very much in the money down here. And then if it comes down here, I'm buying outside the money call spreads for another run up. I do not see the market setting. I do not see the FOM, or I don't see Jerome Powell trying to destroy the market today. I doubt that happens. I doubt that happens today. What happened in September? Good chance. They'll usually line it all up, like a story, like kabuki. So there you go. And the last thing you can tie all this together with would be an advanced Twitter search. If you go to Google, you can just type in. You can sub to me. I post a lot during the day. Sometimes I can become I post a little too much for some people. So if you'd like, you just subscribe or follow me on Twitter, and then what you can do is do a Twitter advanced search, and you can just type in Daily Brief, and Twitter will remember this. Twitter will remember this in the future. See how Daily Brief comes up, and you have from these accounts. You could just do at JimJame 74888-138, and it'll remember it in your cookies. But if you search this right here, if you don't want alerts from me, and you just search that right there and go to latest, you will see that when I am posting these every day, and you can see the one that I posted 1 hour ago here. And I lay out for you my plan for the day. So wait a minute. Oh yeah. So right here is the top of my post for the day. It's my daily brief. Time to put the blinders on, and I roll through all of these right here. So when you get to SPY, I'll show the expected daily ranges, and I don't actually know if these match what's on this chart up here. This is what I use in Portfolio Expert. But you can, an ES and Portfolio Expert on TradeStation. So if you find your lines, or you compare your lines that you make to these lines and see what they look like. Same thing with NDX. I put those out. You can put those on your NDX chart. Same with IWM. I usually put a few comments. We just talked about IWM, and I just said you might not see it, but I do. Bullish. Not that I like it, but I call it how I see it. Scale back your shorts. Do I think we're going to be bullish on IWM for months? No, but in the short term, it looks like it's starting to form. So you can use these while you begin to do your own charting for day trading. And I'd be hard pressed to not be able to have a chart like this day trading today and not be able to decide when I'm going to long the day with some weeklies. Make 100% on an in the money calls, or make 100% in the money puts if you're a bear. So this works for bears and bulls on a daily, playing weeklies on a daily on a chart that you can't really go long or short in right now. All right, that's it for me. You guys have a great day trading. I hope that this helps you in your trading, and there's more to come. I did make a comment on the pinned post on my profile. Inside of that pinned post, I placed links to free trading classes and also a toolkit, a GitHub with links to free tools and a toolkit for you to use. And as I continue to make these videos, this should get you started in the methodology. I think that's it. Please like and subscribe these videos. I hope that these get out to new traders or even traders that just want a reset in their trading, so that they can find a different or an easier view on how to trade this market. Thanks. Have a great day.